JPMorgan CEO Dimon sees inflation blocking Fed cuts. Says stablecoins pose no bank threat. Fed rate cut. Stablecoin. JPMorgan's Dimon warns inflation may block Fed cuts while dismissing stablecoin banking threats despite industry concerns. Crypto journalist. Hassan. Crypto journalist. Hassan. About author. Anas is a crypto-native journalist and SEO writer with over 5 years of writing experience covering blockchain, crypto, DeFi, and emerging tech. Author profile. Share. Copied. Last updated 3 minutes ago. JPMorgan CEO Jamie Dimon warned that persistent inflation may prevent further Federal Reserve, Fed, rate cuts, contradicting market expectations for aggressive monetary easing through 2025. Speaking at the JPMorgan India Investor Conference, Dimon expressed skepticism about the Fed's ability to cut rates significantly while inflation remains stuck at 3%, rather than the central bank's 2% target. Multiple economic pressures keep inflation elevated. Dimon's comments came as Federal Reserve officials themselves cast doubt on additional rate cuts, with St. Louis Fed President Alberto Musalem stating there is limited room for easing further, and Atlanta Fed President Raphael Bostic suggesting the September cut may be the only reduction needed this year. The Fed cut rates by 25 basis points to 4.00% to 4.25% in September, but internal divisions emerged over the pace of future reductions. The banking chief cited multiple inflationary pressures, including global fiscal deficits, the potential for world remilitarization, trade restructuring, and potentially reduced immigration to the United States. He argued that these factors could push wages higher while creating sustained price pressures that complicate the Fed's dual mandate of maintaining stable prices and achieving full employment. Meanwhile, Dimon dismissed banking industry concerns about stablecoins threatening traditional deposit bases, calling blockchain technology real, while distinguishing between legitimate applications and speculative crypto trading. His measured stance contrasts sharply with that of other major bank executives, who have warned of a deposit flight similar to the 1980s money market fund crisis. Fed faces inflation reality check as officials split on cuts. Federal Reserve officials are increasingly acknowledging that the central bank's September rate cut may have been premature, given the persistent inflation pressures above the 2% target. Dimon's inflation concerns align with statements from multiple Fed officials, who now question the wisdom of additional monetary easing in the near term. New Fed Governor Stephen Miron, appointed by President Trump, advocated for aggressive rate cuts totaling 1.25 percentage points across the remaining 2025 meetings. Miron argued that the neutral interest rate has fallen due to tariffs, immigration restrictions, and tax policies, making current rates roughly 2 percentage points too tight and risking unnecessary unemployment. However, regional Fed presidents pushed back against dovish policy prescriptions. Musalem warned that further rate cuts could make policy overly accommodative, while Bostic emphasized concerns about inflation remaining too high for a long time as justification for maintaining restrictive monetary policy. The internal Fed debate stemmed from uncertainty about economic conditions, with unemployment remaining low while consumer spending patterns suggested stress among lower-income households. Credit losses are increasing moderately, though Dimon characterized this as weakening, rather than a disaster requiring emergency monetary intervention. Market expectations for 2 additional quarter-point cuts by year-end face growing skepticism from policymakers who prioritize inflation control over labor market support. The median Fed projection supports gradual easing, but 7 officials now favor no additional cuts, creating potential for policy gridlock if economic data remains mixed. Stablecoin wars heat up as banks fight digital dollar competition. On the other hand, Dimon's dismissive stance on stablecoin banking threats contradicts intensive lobbying efforts by major banking associations seeking to restrict digital dollar competition. 5 major U.S. banking trade organizations have urged Congress to tighten regulations under the Genius Act, warning that stablecoin platforms offering competitive yields could trigger a mass deposit flight. Citigroup analysts compared current dynamics to the 1980s crisis, when money market funds expanded from $4 billion to $235 billion in 7 years, draining traditional bank deposits as customers chased higher returns. Banking group site Treasury estimates suggesting yield-bearing stablecoins could trigger $6.6 trillion in deposit outflows, fundamentally altering bank funding mechanisms. Coinbase and other crypto platforms continue to offer stablecoin yields despite pressure from the banking industry, arguing that prohibitions apply only to issuers, not intermediaries. Not only that, they also face practical challenges as stablecoins offer payments up to 13 times cheaper than traditional systems with instant settlement capabilities. The stablecoin market has grown from $4 billion in 2020 to over $285 billion today, with projections reaching $1 trillion in annual payment volume by 2030. Recent research from Coinbase found no meaningful correlation between stablecoin adoption and deposit flight for community banks over the past 5 years, contradicting warnings from the banking industry. The debate intensifies as major corporations, including Amazon and Walmart, reportedly consider stablecoin integration to reduce transaction costs. Average U.S. savings accounts yield 0.6%, while stablecoin platforms offer returns of up to 5%, creating competitive pressure that traditional banks struggle to match. Dimon's pragmatic approach acknowledges that stablecoin infrastructure will develop naturally as legitimate payment technology, with JPMorgan positioned to provide custody services and treasury management for digital dollar reserves. Follow us on Google News. Trending news. Recommended popular crypto topics. Price predictions. China's DeepSeek AI predicts the price of XRP, Dogecoin and Picoin by the end of 2025. Why is crypto down today? September 22, 2025 Ethereum price prediction. Billion-dollar firm BlackRock pumps $500 million into ETH, $10,000 just weeks away. Perplexity AI predicts the price of XRP, Shiba Inu and Pepe by the end of 2025. Lord Miles. Polymarket chaos over claim YouTuber died during 40-day fast. Industry talk. XRP price prediction. XRP ETF set to launch this week. $100 breakout finally coming? 5 days ago. By Harvey Hunter. Press releases. XRP. The new Dogecoin competitor merging the stability of XRP with the playfulness of the meme world. Price analysis. Solana price prediction. Analysts eye a technical breakout that could push SOL to $310. 1 day ago. By Arslan Butt. Best crypto to buy now in September 2025. Top crypto to invest in. September 15, 2025. By Alan Draper. New cryptocurrencies to invest in September 2025. Top new crypto coins. 15 hours ago. By Inesis Tavares. 13 best crypto presales to invest in 2025. Presale crypto list. 18 hours ago. By Alan Draper. 16 new and upcoming Coinbase listings in September 2025. 2 hours ago. By Elijah Rankovich. 15 new and upcoming Binance listings in 2025. 18 hours ago. By Elijah Rankovich. What is the next crypto to explode in 2025? 3 hours ago. By Elijah Rankovich. Bitcoin, BTC, price prediction 2025 to 2030. 2 hours ago. By Leon Waters. XRP, price prediction 2025, 2026 to 2030. August 29, 2025. By Eric Huffman. Ethereum price prediction 2025 to 2030. September 11, 2025. By Ben Beto.